The mining industry enjoyed a much stronger 2016, with many companies surging to highs not seen for years. Well, we've got higher demand from China, higher commodity prices, and the new US President Donald Trump, his ambitious infrastructure plans as well, all helped the sector regain some strength. But can this resurgence carry on into 2017? We've got Amanda Van Dyck, a Just here, an expert in the region. Hello to you. Thank you for coming into the studio.
Hi, thank you for having me.
So the mining sector, what can we expect there? Because as I say, it did have a much better year last year, especially the latter half. Do you think we can continue with that?
I believe we've entered a secular bull market in the commodity sector as a whole. Commodities are by definition cyclical, and the miners follow the commodities. Last year saw a sort of 8 to 9% increase in gold and general commodities, mostly towards the end of the year, but it was coming off of very serious lows. And commodities, for lack of a better word, were oversold, and the miners with them. They roared back a bit to life, and I think this is probably the beginning of a 3 to 5 year bull run.
Okay, 3 to 5 years, you say?
That's the general length of commodities bull markets, and bear markets for that matter. But usually the length of the bear tends to correspond to the length of the bull.
Okay. And what metals are we talking about in particular? I mean, copper's done tremendously well. Which ones in particular are we referring to?
Well, two of the best performing commodities last year were actually zinc and natural gas, as well as coal. And they were very oversold to begin with. They were down like 50 or 60%, but and they roared back over sort of 50 to 100% each. I think they've probably gotten close to a little bit toppy and will pull back a little. But zinc probably still has some good years ahead of it. Copper definitely has a better time ahead of it. I'm looking pretty hard at aluminum and tin right now, close to doubled. I don't know that iron ore necessarily. I think iron ore might pull back because there is an abundance of iron ore in the world and a lot of infrastructure to get that iron ore to market. So short-term demand and supply glitches in commodities can lead to vast rises and falls in the individual commodity price, but usually the equilibrium price in the long term is how much it costs to get it out of the ground.
Okay.
Plus a small premium.
Sure, sure. I mentioned Donald Trump initially.
Yeah.
Do you think that that's playing its role then in the mining sector just now?
Absolutely, although at this point in time it's expectations, not fact. But America is a huge market, and if America decides to rebuild its crumbling and aging infrastructure, that will put a huge increase in demand into the commodities sector. And everybody believes that he's a man of his word, and if he is a man of his word, it should make the commodities resurgence sustainable.
Companies, mining companies, what have you got your eye on, and what do you see is worth investing in right now? We've had a lot of earnings come out this week.
And the earnings were largely pretty good. I think it'll continue. There's a whole lot of capacity in the mining industry right now, and increasing their utilization just makes them more efficient. So I think for the next couple of years, we're probably going to see some pretty good earnings out of all of them as long as this commodity boom is sustained. Now, it's not. We have to be a little bit careful because it's not going to be equal. All commodities don't rise together, despite what the commodities index might tell you. Coal and iron ore, I think, might have had their run already. There's probably still some room in copper, still some room in aluminum and tin. I think uranium is going to have an absolute bumper year because of the huge number of new reactors that are coming online and the sort of lack of stockpile of uranium to service them. So there's a lot that's good, but they won't all go at the same time. Mining industry is a stock picker's market. It's very hard. You're probably better off buying either an index or a fund that has diversification in it, and people that are like myself that are watching which commodities are pulling up and which companies are pulling up and which ones are pulling down at any given time. So that's probably your best bet. But the diversifieds are never a bad bet either. The Rios, the Glencores of the world, and all that sort of thing.
Okay, fingers and lots of pies, basically.
Yeah.
Okay. Amanda Van Dyck, thank you very much indeed for your time today. We were indeed talking about the miners in 2017.